Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Fibonacci Time Zones on our Tuesday strategy session. We've got sort of a big slate here for this live stream, so we're probably going to get right to it. I've got some markets that we've got to go over. We've got to look at the Euro USD. There's a potential there for a pretty good trade also. We've got gold, a gold trade idea that we've had out there for a long time. Finally came in, and I'm awfully happy. You see me grinning? I'm grinning ear to ear today because that trade was an absolute home run, and we're going to go ahead and recap exactly what happened there and show you really what the idea was behind the trade, trading key levels. Trending markets are fun. They really are. You got an opportunity to get with the trend and make a lot of money, but you also have a chance to counter trend scalp really high probability trades. The only issue is you don't get very many of them. So when they come along, you got to get them. And I think we got them. I think most of us got this one on gold today. U.S. oil, we've got potentially a trade location coming up that I really like. I'm up around 62.70. We're going to go over that again. That trade idea was released yesterday. Then we've got silver, pullback in silver. And then we're going to go over the Fibonacci time zone strategy. I'm going to show you 2 ways to trade it. And it's all based on our video over at How to Trade Com. I'm going to show you where to find that as well. Remember, these strategy sessions, pretty much any question that you'd like to ask. If you have a specific market that you'd like me to look at, I'm more than happy to do so. Just during the actual workshop here, we're probably going to go over those markets towards the end. We've also got a big news events we got to cover, and just pretty much, I mean, we're open for business. Tuesdays, we are open for business. So if you're here and you're ready to trade, fantastic. I like the Fibonacci time zone strategies. I think it's fascinating. You know me, I usually use retracements, Fibonacci retracements, but I've seen so much evidence, so much prima facie evidence that the Fibonacci sequence and the golden ratio are real and that they do function well, not just in the markets, but in nature. It is an interesting way of looking at the world. It's an interesting way of looking at the markets, and it's something that I've favored. Quick side note. I saw a gentleman out there on YouTube the other day was starting to make videos about Fibonacci retracements, and I started laughing because the way that he was lining up his Fibonacci retracements are real similar to the way that I do it. The colors were the same and everything, and I started laughing. I laughed hard out loud. So they say imitation is the highest form of flattery, so you know who you are out there. I wish you all the best in YouTube land. Just don't be stupid. Remember, those Fibonacci retracements are powerful, but without risk management and being realistic about what we expect out of the market, then you're probably going to lose. So we'll see if this young man can get up to speed on those tenets of trade as well. But imitation's the best form of flattery, the highest form of flattery. I must have laughed for 20 minutes watching somebody rip off what we do with Fibonacci's. And it wasn't just the Fibonacci's. It was the colors. It was the levels. It was everything. I laughed for 25 minutes. So that's always fun, guys. I love Fibonacci retracements. And remember, we didn't invent them. They've been around forever and a day, but we're going to apply them to our trading here today and maybe show you a different way to trade, maybe one that you haven't thought about. Interesting stuff. So yes, they're going to see you. Hey, Team Marina. Hi, all. Hi, Shane. I've been absent for a moment due to sickness and relocating. Well, I'm confident you're feeling better, Team Marina. Remember, never trade sick. If you feel sick, never trade sick, ever. You need to be well. You need to be ready to go and just into this because the markets are a tough place to live. And if you can't really do it sick, you've got to be at full strength as much as you possibly can. So that's absolutely all right, team. Blue Mango, good day, Shane. I hope you're well. I'm doing pretty good, not too bad. Had a little bout with sickness myself, but I'm back. I was down for about 3 hours yesterday afternoon, but I got back up. I feel pretty good about it. Good to see everybody in the How to Trade community. Bobby Bob, always a pleasure. Bobby, Andrea Garwal. Good to see Andrea Tuku and 4292RG. All right, that's a heck of a name. Welcome. All right, guys, let's just get right down to business and price action here. Euro USD, this is where we want to start. I wanted to point this out because it's not the prettiest chart in the world, but it's important that we understand really what an ascending triangle is. Now, an ascending triangle in the How to Trade trading room, we have a trading academy. This ascending triangle is an interesting pattern. It's one that we broke down, and we really showed you how to trade it. We showed you how to draw it, how to trade it, pretty much everything you needed. Now, ascending triangles are sort of a little bit fickle in that everybody's going to argue about what the upper and lower trend lines are. The biggest thing you need to remember is that price has moved directionally high and then started to trade sideways sort of into a compression pattern. So if we get rid of everything here on this chart, we're just going to get rid of everything. We've got price action here on a weekly time frame, okay? Weekly. What do we have really going back to January? We've got an uptrend. We really do have an uptrend. I think it's a pronounced uptrend, but now we flattened out. So the first thing that I would say is okay, do we have an ascending triangle? I'd say, yeah, well, that's a horizontal line, but realistically, this is going to be your bullish move right there. Okay, that's your bullish move. Now, this isn't necessarily a pennant. I'm not going to call this a pennant. It's a triangle. So a pennant would be where we've got that run and that real tight rotation. I'm not going to draw a pennant here, but I want everybody to see that directional move that really has been the case for 2025. Now, let's get rid of that. For an ascending triangle, there's a couple of things that typically are always present. Number one, you've got tightening price action. So if we were drawing this and there was a couple of analysts sitting around a campfire and we were going to argue about where to draw the trend lines, one person may say, okay, we start with that, and then we connect that, and then that's our lower trend line. I'd say, okay, fine. On the top side of this is where the argument would really kick off. A lot of folks would say, well, this negates your compression, and I'd say, no, it doesn't. Not at all. What you've got there is you've got a tightening of price action beginning on that spike high back on the 30th of June that week. This right here, I would call an aberration, meaning we didn't close above the upper trend line. So going into that event right there, you'd probably be looking at somewhere. Your trend line would probably be something like that. Realistically, we could certainly adjust it up to there. Biggest thing I want everybody to understand is the triangle needs to really encapsulate where a majority of this trade has taken place. They're not going to be perfect. These trend lines, they're not necessarily going to be perfect. And that's what I really stress. There's several people out there that have gained incredible notoriety and borderline fame by talking about trend line trading and how to be exact, and they're drawing all these different permutations of a trend line. Remember, trend lines are not the most exact tool in the world. They aren't. They're designed to give you an idea of what price action's doing. They can give you support and resistance zones, sure, but think of them as guidelines. Really think of them as guidelines. So with this upper trend line, I don't care if you're drawing it down there. I don't care if you've elevated it up to here. The biggest thing we got to remember is that price is tightening up. It's not moving directionally, and it is flattened out. Realistically, it's flattened out since late July. So when we're looking at the euro-US dollar, you've got an ascending triangle, bullish trend, period of flat trade. Now, a lot of folks are going to say, okay, Shane, what's the big deal? I'd say the big deal is 120. The big deal is 120 right here. This is a compression area right in front of that big round number of 120. Be ready for this. Be ready for this pair potentially to make a directional move up over 120 by the end of the year. We're going to be here for every step of the way, but for right this minute, if you're trading the Euro USD, you're sort of bumping up against that lower trend line right there. 1, 2, this is your third test, but it also coincides with what? Our 13-week EMA, which is at 116.64. Right now, we're printing about 116.75. I think it's probably potentially a bid from this zone. I'm not ready really to throw that down as a trade idea, but if you're looking at this market, be ready for a break. If you break beneath this level, you got to kind of favor the short side of this. But if you rotate back up into this body, which is what I expect to happen, at least until tomorrow's FOMC minutes and maybe Friday's NFP, if we're fortunate enough to get that, then I think that you're going to see compression, and more than likely a continuation of this uptrend up over 120. That's key. I wanted to start with the Euro USD because that's a big market. A lot of people are trading it right now, and you'll see right now it is just whipsaw, and it's been so for about the last half of the summer. Big time area right now we're trading in. Absolute big time for the Euro USD. I don't really think it's great trading right this minute, but if a person wanted to go long right now and be very tentative, meaning manage this thing very tight, I would say that's not a bad play. Maybe a 116 3/4 bid, maybe stopping yourself out at 116.44, 41, somewhere down in there. That's not a bad trade. We should have some support right here. If we don't have support, then we're going to get the big move. In my view, you have to have a catalyst to do that. It'll either be FOMC minutes or it'll be NFP this week. Interesting stuff, guys. A lot going on right now in the markets, a lot going on. Okay, remember, if you're not trading anywhere, you need a broker, or maybe you're going to change your broker. Switch Markets is there for you. That got you covered. Head on over to switchmarkets.com. This is the Switch Markets community. It's where we're taking the education from how to trade and we're putting it in to the actual function and the trading of Switch Markets. And we've got a lot of new content coming up on our Switch Markets YouTube channel. That's all going to be dropping, and it's dropping all the time, really. And then these live streams are available all across YouTube and in the How to Trade trading room. So feel free to join me on a daily basis if you'd like. We have an exclusive Switch Markets live stream coming up, Thursday at about this time. We're going to go over some different ways to trade Bollinger Bands. I've done that a few times. I got a lot of questions and a lot of demand for it, so we're going to go ahead and run it back and do it again. That's going to be exclusively on the Switch Markets YouTube channel or in the How to Trade trading room. So if you're joining us on the How to Trade Com or Forex Signals TV or on X or on LinkedIn, head on over to the Switch Markets TV channel there on YouTube, and you can go ahead and check it out. Okay, let's get on with the program here. This was the trade. I talked about this trade for a long, long time. I got a private message earlier today. Said, geez, Shane, thanks for the trade. Amazing trade, yada, yada, yada. I go, it wasn't an amazing trade. The price action is what made this thing happen. And this is one of those trades that you sit around and it was so easy. It was so easy. And that really is what trading is about. When things are easy, they are easy. And that's what I look for in the markets. There's an old saying, there was an old trader, I don't necessarily remember the gentleman's name. It would make the story better if I remembered it, but the idea was real simple. I don't trade until I see money laying in the corner, and then I just walk over and pick up the money and leave. That's the idea behind trading. If you find yourself forcing or trying to go, well, this is a stretch, but maybe, you're probably going to be in a situation where that situation's not exactly as good as we need it to be. This was a situation. You can't say guarantee, and you can't say those things on live stream, and I would never say that because there is no guarantees in this world. There's no guarantees in this life. This trade was a banger, though. Right up here, we were sitting at 4,000. Our entry point to the sell was about 39.89, and then our profit target was right down the queue a little ways, about $20 or so. So it's about a 2,000 pip trade. Let's go ahead and take a look. 4,000 is our resistance zone. Let's take this right down to a 30-minute chart and see exactly what happened. There it is. You can see we've already sort of got our trade drawn up, what we wanted to get accomplished. As far as this stop loss, that's a little bit high. But this trade right here, 20, we're selling 89s. We're getting out somewhere right around 69. And you can see we went right up there. There was your entry point. Your high was at 39.91. We took a bit of a draw, and then we just came right off and paid us off in the first 30 minutes. That's absolutely fantastic. This trade right here, I went to 85, not quite our 89 sell, and then right up there is going to be our 39.89 sell, and we hit it perfect. We took a $2 draw. Price absolutely cratered in the next 30 minutes. It was a great trade. There's no two ways about it. Now, so the psychology behind a trade like that is, okay, Shane, I mean, trading is really easy, isn't it? No, it's not really easy. I mean, it really isn't. It's not really easy. The problem that we run into with our trade, and this one's not dialed in exactly right. This should be up there around 89, and our profit target was down in, give me my settings here. I got to line this up because it's throwing me off. The bottom line was this. Your entry price was 39.89. We had this drawn up in our trade ideas. It was 39. Let's see, your profit level was 69. 39.69. And then your stop loss was going to be 4,009. A lot of nines, right? What did you have? Beautiful thing. That was a real beautiful thing. So the question becomes, Shane, can I make a fortune trading these things? No. What do you mean? It's a high probability trade. You don't get enough of them. How many times has the world got a chance to sell right in front of $4,000 in gold? Once. And it happened today. Now, that's not to say that if you don't understand how key levels work that you can't make a little bit of money doing it. Let's be honest, 4,000 is probably going to go. You're going to see price break above 4,000 in gold. When that happens, you can almost, those of you that have been on these streams for a while with me, know probably what I'm going to say right away. And it's going to be, we're going to be watching 42.50. We're going to be watching 45. We're going to be watching 47.50. And then we're going to be watching 5,000. In my view, all those quarter handles, 42.50, 45, 47.50, they're nowhere near as strong as 5,000. When gold gets up to 5,000, we'll be going in again right in front of it. So if you miss this one, don't feel bad. It's not the end of the world. Understand how key levels work. If you don't take anything else away from these streams, understand how those work. Okay, we're falling behind here. I got to get to time zones. Let me see. That's a quote from Jim Rogers. Yeah, I think so. Yes, sir, you're right. I love that quote. I just wait until there's money lying in the corner, and all I have to do is go over and pick it up. That's exactly right. That was money was just laying there. The problem was you had to have the discipline to wait and keep your powder dry and your liquidity until price reached 4,000. That's huge. That's huge. All right, this is another one. This is not a key level. This is just a Fibonacci retracement sequence. U.S. oil 61.46 is what we're printing right now. A lot of compression right now in the oil market. That's okay. It's not necessarily scaring me out of the bearish side of this. I see it as an opportunity maybe to get an opportunity to sell a better place on our chart. And right up there, great trade location, typically means profitable trades, 62.70. Very, very good. We've got that drawn up as a trade idea as well. So if you're missing these trade ideas, head on over to the How to Trade trading room. I showed you how to do this yesterday. You just go over, take a look at our analytics thread, and if not, you just click on my picture and then follow me, and these go right out to your email inbox. But this trade idea right here, we're looking at 62, 64, somewhere in there. I like to trade if we rally up about $1 from here, which we certainly could. We've got an EMA right there sitting at 62.50. Love it. 13-period EMA, 13-day EMA, and then you've got 38% up at 62.70. That's fantastic stuff, guys. I'm really looking forward to an opportunity to sell this market. We will see. We will see. There's our EMA. There's our Fibonacci. We'll have a chance there potentially to do it. One last one, and then we got to get on with the program here. Key level, 50. Big pullback in silver, still extremely bullish, but nice big washout. This is what I would call a washout. It's hammered all of the intraday longs. It's hammered all the intraday longs. It's hammered all the retail longs that are position long silver. You guys are right, and if you got stopped out on this stuff, that's why we have to wait for trade location. I love the golden zone. The back end of the golden zone here, right now we're trading about 47.70. If we get down to around 47.09, somewhere in there, that's going to be a tough one to pass on. I'm watching that one relatively closely. I think that silver bid is fantastic. Okay, guys, let's go ahead and get on with the program here. As far as our biggest story in the world right now is the U.S. government shutdown. We don't know what's going to happen. There was a vote yesterday to, approve a temporary stopgap spending bill that was going to get the government out of gridlock and up and rolling. It failed for the 5th time. So we're looking for probably another vote this week. Who knows? I mean, a vote, maybe 2 votes. The big thing we're worried about here is NFP on Friday. That NFP, U.S. non-farm payrolls, we're going to cover it live potentially. If in fact it does come off, but if the government's still shut down, we're probably not going to get our NFP number again. So we've got to be very careful. This is a dynamic situation. I think that they're going to solve this problem in the next few days, but there's a lot of moving parts here, and I won't get into the politics of it because basically the Senate, they need about 6 votes or 8 votes in the Senate to get the deal passed. And typically how this works when you have that few votes, those people are holding out, they want something. They either want something for their district or they want to be approved to some board or some cabinet or something. Who knows? That's just, they're playing government games. My guess is it's over by Friday, but I genuinely don't know. That's only 48 hours or so, 72 hours. We could definitely be doing this for sure. Let me see. Nico Letterman, can you look at the Kiwi CAD? All right, we'll look at the Kiwi CAD here very, very quickly before I dive into this tutorial on time zones. Okay, Kiwi CAD, this is over on your MT5 Switch Markets platform. What you have here is a situation where it's very tight monthly. If you were trading this on a monthly time frame, I would say it's very, very tight. Now, what you have is you've got a reversed hammer there, an inverted hammer. That typically suggests you're going to get some bearish price action, but you've seen early October really rotate back up into the guts of this month. So I would be careful. Now, we can draw a trend line from down here. We could draw one right up there. I wouldn't worry about that just yet. We could also do a Fibonacci retracement sequence, which will give you an idea really of where price sort of is residing right now at the moment. I don't love it. I just don't love it. I think that that's a difficult retracement sequence to trade, but you can see we hit the back end of the golden zone at 62. So I would be frosty there at about 80, 39, somewhere in that zone. Probably pretty good support right around 80. If in fact that 80 level breaks, then you probably could ride a short down to about 79, 79.24, something like that. The big thing I would take away from this market is it's very, 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 very tight. We haven't seen huge movement back since, what is that, the April? It looks like April to me, somewhere in there. But that was really the crazy month on the Forex, and now we've just traded absolutely sideways there with the Kiwi CAD. Remember, the big market mover, the big thing that's happening during the early Wednesday session, tonight's overnight U.S. session, is going to be the RBNZ. We put it in that market analytics thing. I went over all that in our weekly Switch Markets newsletter and the video that's on Switch Markets on YouTube. Go ahead and check that out for the analytics. But the bottom line is this. We're expecting the New Zealand, we're expecting the RBNZ to cut interest rates this evening by 1/4 point. If they do that, if they don't do that, we should get some movement out of this pair, the Kiwi CAD. So crude oil sort of in a stagnant position today, not a big mover and shaker, but the RBNZ will dictate policy. That will be the big mover here. So if you're looking at the Kiwi CAD there, you definitely want to be aware of the downside support levels, probably right around 80.39, 80.40, probably 80.25 is a pretty good support level. That area between 80 and 80.25, that's probably where I would hang my hat if I was going to take a short-term bid. If not, feel free to wait for a break beneath last month's low and potentially make a run at the 78% level, which is down there around 79.25. Is it a great market to be trading right now? Yeah, I think you're going to get some action here. So if you were looking at this, this is your weekly. Very, very choppy, very, very difficult to trade. There's no two ways about it. We could try to sell from right in here. I wouldn't do it. I would wait for this thing to move. As far as what we can show, just is rehashing what we just did on MT5. This would be sort of your Fibonacci sequence. It's not a very good one. That low there, right there to that high. And what did you have right there? April. That was the tariff craziness. And you're coming right down to last month's low, which is right on 80.25. So, yeah, we're pretty good there. 80.20-ish. I think that zone right in there probably is going to be where the money's made. If we break beneath that level, you're probably riding that train down to 79.35, 79.40. That's what I'd be looking at with the Kiwi CAD. Very, very tight, though. We can go to lower time frames if you want, but you're going to see the problem right away. Okay, there's sort of your retracement. Do you want to buy it or sell it? I wouldn't do anything right now. We could put a Fibonacci on it from this level, spike low to a spike high, and look for this intersection right here. 62% is 80.75 on our daily. Our monthly 50% is at about 80.80. If you wanted to take a short-term trade and try to scalp this thing later this afternoon, maybe here in the United States, you could probably do that. You'd probably take a shot from like 76, 80, 77 maybe, and have an opportunity maybe to step up there and bid something with some confidence. But just remember, that is the big mamu. The RBNZ, that's the big dog. That's the 5,000-pound elephant. That's the one that's going to move the markets. Be careful if you're doing anything ahead of the RBNZ, and definitely be aware when that hits the news wires, because this pair will go crazy. The Kiwi pairs will all go crazy. Okay, guys, that's about a wrap for that. Let's go ahead and get on to our Fibonacci not our counterpunch, but our Fibonacci time zone workshop here. We've got some time. If you have any questions at all, be sure to ask them, and I'll be sure to do that. Let me see. Profile Gaming. Hey, Shane, how's your Tuesday? Mine's the worst. 3 consecutive buy setups failed, although one took take profit hit but didn't set break even and washed off in a guess London gold fall but risk manage. By the way, it's Universal. Well, Universal. Universal, it's my day is good. The gold, for me, the gold trade hit, and that's what I've been looking at that for weeks, and the execution was flawless, and it just was good. So, one of my rules about that is when you have a big time level and a big time trade come in and you hit it, is there really any reason to keep trading? No. Take a break, count your money, go have dinner. But if it's been a tough intraday session, and I can see why, this is one of the reasons why I focus on those macro levels. I'm looking at my tote board. It's ugly. It's mixed. It's ugly. VIX is up a little bit. The stocks are down a little bit. Gold's up. You're seeing some action in crude oil that's not really very good. It's 0.5%. It's nothing. Silver's probably your big mover and shaker. The U.S. dollar showed some strength early. Now it's off. Natural gas is on the move. It's not bad. This isn't a very good trading day for a Tuesday. I'm disappointed. I expected more, but when you get a macro level to come into play and you're in and you're out very, very quickly on a 2,000 pip trade, what do you say about it? Let me see, Mr. M. Hello there. Hope you're doing well. I'm doing very well. Doing very well. Can I ask you something, please? Sure. Can you give me a tip on your 2 or 3 best websites and where I can see real-time action? I like TradingView, but I would like to compare something to see if any difference. Oh, good idea. Yeah, so what I would recommend is TradingView is always good. The web-based is pretty good. I have the download in the app, and I got the huge subscription and all that stuff because I need all the data. But if you don't want to go that route and just web-based, so you could probably go there. I believe there's a live feed that you can get some live charting on. See, that's the thing. Most of those links to the brokerage websites are through TradingView. So what I would do is open up a demo, and then I would look probably on your MT4, MT5 and compare the prices of the currency pairs. That can get you up and running. If you're looking at TradingView futures, what I would recommend is if you're looking at, like gold, E-mini S&P 500, WTI crude oil, those futures contracts, if you're doing that, you go right to the CME website and compare the data. Even though it's delayed, you can still compare the historical data on like a 1-minute chart. Good question, though. I'm trading Egan, went well today, but I lost on B. Okay, so you're trading stocks, it looks like. Yeah, as far as stocks go, you go to the NASDAQ website if you're trading tech, and then, there's so many of them, honestly. Just run an AI search or Google it. Okay, guys, let's get going here. Here's how to trade calm on YouTube. Most of you, or a lot of you, know where this is, and we put out just an absolute ton of videos here. Most of them are, most of them are strategy videos. There's some orb videos there. Intraday trendline reversals. Not hardly anybody watched that one, and that's okay. That's cool. Trade the break was another good price action strategy. The Forex orb, people love the Forex orb. EMA crossover strategies, when not to trade them. Grok 3 for TradingView. EMA scalping strategies, 22,000. That was a pretty good one. A lot of folks really love that 5, 8, 13 scalping. 9 EMA Fibonacci retracements. That's always fun. Fibonacci retracements are my go-to. But what we're talking about today is Fibonacci time zones, and it's right there. I put this one out last year, and it was, I don't know, it's got a few thousand views, but it's about 10 minutes long. And when you go through the video, it shows you exactly how to trade it 2 different ways, and shows you how to set up these scenes. So if you see anything that you don't understand today, go check the video out, and you're going to be in good shape. Now, here's the deal. When it comes to Fibonacci time zones, you've watched me, if you've watched any of these streams, you've watched me work Fibonacci retracements thousands of times, tens of thousands. Some of you have checked in on my streams for the last 4 years, hundreds of thousands of times. And that's a viewpoint of price moving north and south. And it's a way to quantify when price is moving in a direction. And then we have all these different entry points and different ways that we can trade it. Oh, this is a 5-minute E-mini NASDAQ chart, by the way. So what we're going to do today is, instead of looking at the chart from north to south, directional moves, or south to north, we're going to look at it from east to west. We're going to look at it when price is moving sideways to try to figure out when we're going to get a reversal in the market. Now, this is a pretty good look at a 5-minute, NASDAQ, E-mini NASDAQ futures. This is one of the big movers and shakers. A lot of people love to trade this. It is vicious and volatile. It is volatile, and that's okay. A lot of times you can make a lot of money in this market. A lot of times you can lose a lot of money in this market, but that's neither here nor there. Fibonacci time zones. Instead of measuring the strength of a pullback or the strength of a trend, we're trying to measure where the market is potentially going to reverse. We're looking for reversals. Now, a reversal doesn't necessarily have to be the beginning of a new trend. A reversal can just be a retracement of previous price action. So in one respect, we're using Fibonacci retracements. We're using retracements to enter the market, these levels to enter the market, okay? So we want to get in on this initial move, and we're using these as sort of measuring tapes to follow that pressure. Now with Fibonacci time zones, we're going to use these Fibonacci levels that are generated from the Fibonacci sequence, the golden ratio. These are going to tell us which point in time the market is likely to change direction. All right, let me show you what I mean. So if you're working on TradingView here, you're going to go right over there to your left-hand side column, and you're going to cursor right down to Fibonacci time zones. It's going to be your 4th one down. Go ahead and click that. Okay, so here's your Fibonacci time zone. Now, the key to Fibonacci time zones is you have to start with a decent range. Now, if you go watch the video, I tell you in the video, you're basically looking for swing highs and swing lows, but it could be anything you want it to be. Let's say that we wanted to trade the U.S. session in stocks only, then we would start at that U.S. opening bell and maybe pick a time frame like a 15-minute or 5-minute, let it trade for a half hour, and then go off of that range to build our time zones for the rest of the day. You can certainly do it that way. For the sake of this workshop, I'm going to keep it as simple as possible. You can use this on your 4-hour chart, and in the Forex, we're going to do that in a minute. You can use it on intraday stocks. You can use it on commodities, whatever you'd like. So the first thing you're going to do is find a swing high and a swing low. I'm going to go ahead and pick this one right here. This is the most recent real spike high, and I'm going to start my sequence right there. That's my point 1, my 0 point. Now, my point number 2 is going to be at the next swing low, or potentially a swing high if we're in a different type of a market environment. But this swing low right here, this is what we're going to use right there. Okay, now what do we have? We have a time zone sequence. We went right from this spike high, this swing high. That's really when our bearish move started, right down to its bottom. That's when our bearish move concluded. So there's our 0 point. Here's our 1, 2, 3, 4, and 5. Now, what do these lines mean? These lines signal potential areas where price is going to make a move. All right. In this case, our initial range, let me just blow this back up so we can see it. It's sort of tight 5-minute chart. This initial range is a bearish sell-off. Boom. Right from that spike high to that spike low. So from here, we're thinking, okay, there's our 1 level. Now, are we going to trade right out of the gate from our 1 level? We could just make a bid right here, put a stop loss beneath the swing low and anticipate we're going to rally. In my opinion, that's a bit risky. That's sort of like trading that 23% level on retracements. I don't do it. I'm looking for a way to predict what's going to happen down the road a little bit after I have more evidence. So right there, there's your initial range. Okay, there's your pullback. So right here, and these are going to be in mountain time. So if you're in Eastern time, add 2 hours. If you're overseas, which most of you are, you're going to probably have to look at this in GMT. My point is this. We're rolling forward in time. So right there, we started at 10:35 a.m. my time. Our first point, our point number one, was at 10:55. And then our next point is going to be at 11:15, right? Interesting stuff. So what do we got? Is that, in fact, a turning point? It's a potential turning point. What kind of turning point would it be? Bearish move, sort of rotated back up. We would be looking to go short here, potentially, maybe beneath this bar, or maybe just to take a short for this time zone, betting that we're going to close lower than where we opened, given this time zone. So what's our next time zone? This is our 3 line. Well, excuse me. That's our 0 line. That's our 1 line. That's our 2 line. Now our 3 line. What is that? This would be an area potentially where we would either exit the market if we were short from here, or we would look to go long potentially after this retracement's over. Now you'll notice the market's sort of flatlining right here. It's going to make this sort of tough. But let's sort of walk forward in time and really try to figure out what's going to happen for the rest of this trading day. Okay, so the next turning point in this market, according to our time zones, is about 11:35 a.m. So right now it's about 11:30, so that's going to be about 4 minutes. That's what we would look to either exit a trade, exit a short trade that we have on, or potentially enter a long trade. Why? Bearish move. Initial move's bearish, okay? Rotation, rotated up to the next time zone. Now we're looking to go short. Once the short's over, what are you looking for? Potentially going long. Now, ideally, you want a big move to develop between these time zones so you can have a shot at maybe a position trade and bigger profits. Now, take a good look. One other observation before we start throwing this on Forex pairs on longer time frames so we can show you how to use this to position trade. Notice, as you move further in time, the distance between the 3 and the 5, it gets pretty big. It gets pretty big. You'll notice there's no 4 in there, is there? Why? Why isn't there a 4? Fibonacci sequence. Go to 5, then we go to 8. Then we go to 13. It's the Fibonacci sequence, guys. 0, 1, 2, 3, 5, 8, 13. What is it? Essentially, it's 2 plus 3 is 5. 5 plus 3 is 8. 8 plus 5 is 13. So, if we were going to be developing a strategy here, U.S. session, right? U.S. session, I'm trading U.S. equities. I got a short time frame chart. When would we want to be trading this if we were trying to pick a reversal? Probably not until the 5s and the 8s, maybe. So let's take a look at that 8. That 8's right around 1:15 p.m. from now. What do I know is going to happen right around 1? Power hour. So essentially, we would be looking to make a shift on that last 45 minutes of the session. Right here, if we were looking right here to go long potentially, then you would be looking to go short. And then you potentially what? You'd be looking to go long right there. So theoretically, I don't have to do anything that I don't want to do. I can wait until that 8 level comes up at 1:15 and maybe take a shot to the long side through the market close. Is that a strategy? Sure it is. Is it a good one? Maybe, maybe not. Depends on what exactly happens. Now, you could certainly do that based on your most recent wave. Or what else could you do? You could back off your time frame, which is what I recommend. Maybe we could go to a 30-minute time frame here. What do we have? 7 a.m., so that's during the pre-market. Now you can see our sequence. Okay? There's our 1. There's our 1 level right there. We've crept higher from that 1 level. Here's our 2 level. The 2 level would be a signal to go short, essentially. The 3, when does the 3 come across? After the market. So if you were trading a 30-minute chart, U.S. equities, trying to trade that U.S. session, you're probably going to have to make your decisions on that 2 level, right? So if you're coming off big here, here's a big sell-off. There's a bit of a retracement. Hey, listen, like it or not, you're up a little bit. If you bought in right at the right here on that one, I don't recommend that. But your two signal here, your two Fibby, this would be a signal potentially to follow this initial trend and go short. It's pretty interesting stuff. I was going to introduce another concept here, but I don't know that we're going to have time. But you could build something I would like to call a crosshair trade, which is a video that I'm thinking about because this strategy is interesting to me. There would be your big wave with your retracements. Look where your retracements would intersect. So if you did get a rally right up to, say, 38% and you went off the board at that 2 level, then you would be going short. That's what I would call a crosshair trade. We'll talk about that some other time, but interesting. So you can see the utility of this type of a concept. Let's get on over to MT5 and let me show you how to put up the time zones on MT5. Let's go ahead and get rid of these Fibonacci retracements here. Okay, so if we want the time zones, it's a little bit more involved. You're going to go up here to Insert. You're going to go to Objects, cursor down, go to the Fibonacci tools, and then there's time zones. And you build them the same way. So let's say you were looking at a monthly chart. This is what the monthly chart would look like for that Kiwi CAD. So look at right here. There's your sort of your spike high. Did you have a turning point here? Yeah, you sort of turned. Did you? No, that one didn't work. Rallied, went down. Did you come back? No. So what I would say is if you're going to trade, let's say a Forex pair, I'd be looking at a 4-hour chart. That would be sort of my hint if you wanted to turn over a rock here for a Forex pair. Go 4-hour chart. So let's sort of put this idea in action right here. This is a 30-minute Great Britain Pound USD chart. Let's back this thing off to 4 hours. What's the most recent? Couple of ways to do this now. You can see right here, this is when your trading week started. Right there, that's when the market opens. So if you wanted to build a Fibonacci, a Fibonacci time zone for the entire week, you could do something like this. You'd say, okay, where's this first spike high? And then you'd be right up here on this this would be your 1. There's your 1, 2, 3, 4s, and 5s, right? So where are you at now? Boom, right there. There's that one nice reaction. You'd have been looking potentially to go long here. It didn't happen. Don't worry about it. You come right down. You'd want to go short there. You're sort of backwards now. What would we be? We'd be on a long now for the next one, right? Interesting stuff, guys. What would we do? We'd be looking to go long potentially on a 5. Right there. There's your bullish move. Boom. There's your bullish move. You come right here. There's sort of a pullback. You'd be looking to go potentially long there. Didn't really work out for you. Price sells off. You'd be wanting to go short here. Doesn't work out. Comes back. Now on this next one, you'd be wanting to go long. So you're looking at wanting to see a flat market and then step up and bid this thing, potentially put a swing trade on for a couple of days. This is a fantastic swing trading tool here for a 4-hour chart. And you'd see that you really want to start making the decisions on that 8 because you've got that would come across the board on tomorrow's session, and then you'd have all the way until Friday to really take a position in that market on a 4-hour chart. That'd be a beautiful swing trading tool if you could dial it in correctly. Now, that would be one way to do it. Now, another way to do it would be to sit here and say, okay, what's my current move? And I'd say, all right, your current move, and this is how I would do it, as your most recent spike high to spike low, boom, right there's your spike high. There's dialing in your 1 level. So what do you have right there? There's your big bearish move, and now you're sort of rallying right here, and then potentially you're going to look maybe for the next bearish move. Remember, this is where you're expecting the market to turn. That's what you're looking for. So as far as trading this thing, how would you get in on a trade? Well, for the sake of argument, this 1 level, I would wait for the 2 levels. I really would. But let's say you have a 1 level right here. How would you do it? Very simple, very easy, and this is all in the video, guys. Nice big sell-off. So what would you be looking to do? If this is a negative, you'd be looking on this 1 level right here to take a positive. So you'd want to take a bid. So your bid would be where? Right on that bar close. Boom, there's your bar close. As soon as it closed and that 1 was in the books, you take the long. Where's your stop loss at? It's right beneath that swing low. Where's your profit target? You have a couple of options. Number 1, your profit target could easily just be a function of price action itself, and you just exit no matter what on the next time zone. You could do that. You could also put it as a fixed risk versus reward. In this instance, we would have been long from 134.14 down to 133.86. 14 and 86 is 24. So it'd be right up here at maybe 30. So we're looking for 34 pips, something like this, maybe 48-ish. something like that for a 1 to 2. So if you get up to this level first, you would just take the profits because it's a fixed risk versus reward. Something like this right here. That would essentially be the trade. It's not bad. Not bad at all. So there's a lot of different ways to trade this thing. If you're looking for a couple finite ways, go ahead and check the video out. One last thing that I will introduce today, and we don't really have time for it because it does take a while, but confirmation. I cover confirmation in the video. What happens if I'm not having much luck? Let's say let's go down to this let's go down to this 30-minute chart, Great Britain pound USD, and I'm sitting here, I'm saying, okay, what do I want to do? What do I want to do here? Well, here's my Fibonacci time zone. All right, let's go right from this swing low right up to this spike high. I urge everybody to keep these as obvious as you possibly can. Make sure the levels are obvious. You could certainly start there. You could start here if you wanted. Just remember, you've got to pick one. You've got to pick. You might start right there at the beginning of the day, and that might be your time zones for the first right from the beginning of the Forex trading day. You could certainly do that as well. You could focus on the London session, the New York session, or you could just keep it as current as possible. There's nothing wrong with that. You could say, okay, I'm starting trading right now. There's nothing wrong with that. You just got to, be confident in what you're doing and be sure to do a little bit of work, do a little bit of research. In any case, something like this. So here's going to be your move, right? So I'm like, I don't know what I want to do here. Add some confirmation. Fibonacci's have always been recommended. They've always been best used in concert with other indicators. I have that rule somewhat with a moving average, but you don't have to use confirmation. But if you want confirmation, you can certainly use it. So what would we use? Pretty much what I always use, relative strength. I use it because it's simple. So what would really the trade be? You'd be wanting something to be your RSI when it's below 30. You're looking to buy. When it's above 70, you're looking to sell. You would absolutely love to see a market that's above, say, 70 when you're supposed to reverse. So in this instance, here's your one level, okay? So here's your one level. There's your rally. So now you're sort of looking for this market to creep back down. Well, if we were in overbought territory, your RSI was above 70 when you hit this time zone, that'd be a great signal to take the sell. And we can do some of these things on extremely short time frames. I mean, we're not shy. We can go right down, let's say, to let's go to a 1 minute chart. Okay, so if we're going to use it, let's start fresh right here. 1 minute chart. What would our Fibonacci time zone potentially look like? Lots of ways you could do. You could go to this move right here if you wanted. You could go to this grinder right here if you wanted. Let's just go ahead, for the sake of argument, go from this swing high to this swing low. Do we have anything on our RSI? You can see we're right there at sort of the 50-yard line. We've got to get either beneath that 30 where we can buy or above the 70 where we can sell, or we got nothing. Let's go ahead and try to find something that's trending. Natural gas. Okay, here's natural gas. We're still not outside of our RSI. You could do something like this. You could build off of this this move here. Let's go to gold. Gold futures. Do we have anything? We're sort of getting up towards overbought territory. Let's take this down to a lower time frame. 30 seconds. 15 seconds. Just see if we can place a trade here. All right, we're getting there. Let's go ahead and try this. Okay, so we're right up around that 70 level. So what would we be looking at? Let's just, for the sake of argument, let's say this swing low right here. This is sort of the prominent move. Let's go right here. Let's go from this swing low right to this swing high, and that would be our one level. So right there's your bullish move. You're looking for a pullback. Now you're looking for what? Potential reversal. Right there, bullish, pullback, bullish. Now we're looking for a bearish type of a move. This could be a situation where everything lines up perfectly. Now, we're sort of getting into that overbought territory. What you want to see is that RSI go up over 70. That gives us the green light to sell, and we'll sell at market, and we'll see what we can do here. Are we overbought right now? No, we're not. We're coming up on our 3 level, and remember, we're looking to get that reversal right here. There was our bullish move. There's sort of your bearish. Didn't really happen. bullish. Now we're looking bearish. We want to see on this 3 level if we get the sell. Okay, right here, we went back down inside of 70, so it's not the trade. We'll take it anyways just to sort of execute. We're right up there. We're very close to 70. We're printing about 61, 65, but something like this would be where you would look to play the reversal. So to execute this trade, let's go ahead and just sell it for the sake of entertainment. Where would your stop loss be? Be right there, right up above that swing high. So now you have options. Now the market's breaking down. Okay, so if it does break down, what did we risk? 10. What did we sell right here? We sold 9.6. I mean, that's really only about a 9-tick risk. So something like this, you're probably going to be right around 8. 8.5 would be a 1-to-1. Something like that would be a 1-to-1 trade. If you wanted to wait, you could certainly just put this trade on and wait until you get to your 5 level, and then you could exit there. Or you could be looking to do something and maybe make a little bit of money. Try a 2, or 1-to-2, 1-to-3, something like that. It really is up to you. The biggest governing thing you need to remember about time zones is when you come up on the next time zone, you got to get out one way or another. You've either already hit your profit target and your risk versus reward, you've been stopped out, or you take profits at that time zone level. Essentially, that's what the trade would look like. This was a very good example. It was very close to being perfect for us. You'd have loved to have seen that being an overbought territory, and then we have an opportunity to sell potentially. But you can see the trade's starting to go our way a little bit. I mean, we're right around even. We need to get a little bit of a break. The gold market this time of day is not really that live from my experience. It's typically dead, but you're starting to get a move now. So 3, 4, 5, what do you want to do here? Do you want to take the money? Don't you want to take the money? It really is up to you. It's all about your goals and what you want to do here. We know where our stop loss has to be. It's got to be right up there. Where do you want your take profit to be? Take profit, let's see, 120. Let's go ahead and just put this on at a 1-to-1, something like that. That'll work just fine for you. All right, guys, those are Fibonacci time zones. It's just another structured way to build your trades. All right, we got some questions here. I'll answer them. I know I got way behind on the live chat, but I just wanted to articulate a few of those ideas to make sure we're all on the same page. Let me see. Thank you. I like the way you describe these sessions. I'm from London, and started in April to trade, but I am a beginner. That's great. We all got to start somewhere, so just stick to it. Dedicate yourself and go after it. I'm sure happy that you enjoy everything. Universal, hey, Shane, good to hear from you. By the way, I'm back on this account. Good, Universal. Good to see you. All right, everybody. I'm going to go ahead and sign off, but those are Fibonacci time zones. As you can see, the sky really is the limit with these things. I recommend using them as a part of your strategy. We can incorporate them with moving averages. We can use them with RSI. We can use them with Fibonacci retracements, which is something that I'm kicking around. Maybe we'll make a video on those crosshair trades. I think some of you may really like it. I'm fascinated by the idea. As far as what to expect the rest of the week, tomorrow we're going to be trading the FOMC minutes. That's a big stream. I'll get you prepped and ready to go. You'll know exactly what you need to be looking at for the trading. For the verbiage out of the FOMC and some of the key talking points. Also, we're watching the government shut down. We should be back for NFP Live on Friday if the government reopens. If they do not, then we won't be able to do it, and that's just sort of going to be the way it is. It's out of our hands. And then as far as what's going on Thursday, it's going to be an exclusive live trading webinar for Switch Markets clients. And that's going to be on the Switch Markets channel and also in the How to Trade trading room. And it's going to be the Switch Markets live webinar, trading Bollinger Bands, right around 1 p.m. Eastern. Okay, everybody, I want to thank you for joining me today. Have a fantastic session. Trade the action well, and we'll talk soon. See ya.